Hello and welcome to another edition of Capital Market live on Channels Television. I'm Willie Bong here in Lagos. Let's go on and check in on the markets. We start with Europe, where stocks closed higher on Friday as fears over the Chinese property market cooled, while investors monitored corporate earnings and key economic data. The FTSE 100 rose by 0.2%, the German DAX appreciated by 0.46%, while the French CAC 40 climbed 0.71% higher to close on Friday. Markets in Europe emulated overnight gains in Asia Pacific, where shares of China Evergrande Group bounced in Hong Kong following media reports that the embattled developer is set to pay off a coupon payment on a dollar-denominated bond. Meanwhile, French mall owner Clopier rose over 8% after hiking its full-year guidance as retailer sales and rent collection neared their pre-pandemic levels in the third quarter. L'Oreal shares jumped 5% after the French cosmetic giant announced better-than-expected third-quarter growth. And in the UK, the composite reading unexpectedly climbed to 56.8 from 54.9 in September. But new data also showed that UK retail sales fell 0.2% month-on-month in September, well below consensus expectations for a 0.5% rise. Now in Asia-Pacific markets, stocks closed mixed on Friday as shares of China Evergrande Group surged in Hong Kong following media reports that the embattled developer is set to pay off a coupon payment on a dollar-denominated bond. Shares of Evergrande in Hong Kong surged 4.26% on Friday. Evergrande Property Services Group also saw its stocks jump 1.7%. The Hang Seng Properties Index advanced 1.4%. The broader Hang Seng Index in the city rose 0.42%, while mainland Chinese stocks closed mixed with the Shanghai Composite falling 0.34%. Chinese media reported Friday that the debt-ridden developer China Evergrande Group was preparing to pay the interest on a bond that was due September 23 before the grace period ended on Saturday. Japan's Nikkei 225 rose 0.34% to close on Friday. Now to the U.S. markets, all major averages finished the week higher for 3 straight weeks of gains, with the Dow Jones Industrial Average rising to a record close. The Dow climbed 0.21%, its first record close since August the 16th. This S&P 500 edged lower by 0.1%, a day after the benchmark closed at a record, while the Nasdaq Composite shed 0.82%. On the month, the S&P and Dow are up more than 5%, while the Nasdaq has gained 4.4%. The Dow got a boost on Thursday as investors rotated out of tech stocks and into blue chips. American Express led the index higher with a 5.4% gain on the back of a strong earnings report. Intel and Snap pulled the Nasdaq lower on Thursday after both companies reported disappointing earnings. Social media stocks also dropped, with Facebook and Twitter pulling back 5% and 4.8% respectively. However, several tech stocks rose to all-time highs. Back home at the domestic markets, where although equities kicked off the week on a sluggish note, positive sentiments resurfaced later in the week as investors cherry-picked attractive dividend-paying stocks. Accordingly, the all-share index notched a 0.8% gain to close at 41,763.26 points. As a result, the month-to-date and the year-to-date gains increased to 3.8% and 3.7% respectively. Bargain hunting activities in Nigerian breweries, Boa Cement, Total, and STANBIC IBTC drove the weekly gain. However, the activity levels were weaker than the prior week as the trading volumes and values declined by 45.6% and 42.9% respectively. Analyzing by sectors, the industrial goods, oil and gas, and banking indexes posted gains, while the insurance and consumer goods indexes declined. The Nigerian Exchange Group, newly listed on the NGX, topped the gainers leaderboard for the week. Its share price rose by 23.94%, while Royal Exchange PLC, down by 17.19%, led the underperforming stocks. The trio of FBN Holdings, eTransact International PLC, and Access Bank contributed 40.07% and 34.29% to the total volume and value of shares traded in the week. Similarly, activities at the unlisted securities market closed the week on a positive note as both the NASD OTC Security Index and market cap advanced by 0.1%. At the same time, the NASD investors gained 0.6 billion naira, taking the market capitalization to 617.59 billion naira this week. However, total volume of securities traded decreased by almost 100% to 2.07 million units, while value fell by 93.3% to 38.96 million naira from 584 million naira traded in the previous week. NESD PLC and Friesland Campina Wamco PLC ranked among the 5 most traded securities by volume and value for the week. NESD PLC topped the gainers chart while Friesland Campina Wamco PLC led the losers. Now let's see how the fixed income market fared for this week. The bond market was bullish this week as the bulls dominated most of the trading session. At the close of trading on Friday, the trend was sustained with selling pressure across the board. The overall average benchmark yield closed at 8.4% at the close of trading, indicating a week-on-week rise of 1.81%. The Treasury bills market closed the week mixed with the bears and bulls leading the market in different trading sessions. At the close of the market on Friday, average benchmark yields for Treasury bills closed at 5.38%, OMO bills at 6.44%, and CBN special bills closed at 5.97%, posting a week-on-week rise of 3.43% for the Treasury bills, while the OMO bills and average yields for CBN special bills fell by 0.46% and 1.05% respectively. Now, to discuss the developments in the market during the week and other related issues, I have in our Abuja studio Nigeria's first professor of capital markets at the Nasarawa State University, Kefi, Uche Uwaleke. Welcome, Prof, and thank you so much for joining us.
Yeah, good evening, Will. I'm delighted to be here.
Thank you, Prof. I'm delighted to have you too. And now let's begin by taking a look at activities in the local bus this week. The equities segment has maintained a positive posture since the month began, with most of the sectors recording strong gains. What factors are responsible for this positive trend, and how can it be sustained?
Yeah, you can say that again, Will. As a matter of fact, this month we saw the NGX all-share index, crossing the 41,000 mark. We've also seen equities market capitalization inching very close to 22 trillion. And all through the month, you realize that it's just a few days that we've recorded, some depreciation in the all-share index. This week, for example, except for Monday, when the market shared just 0.7%, all through the week, of course, the market was up. Of course, you know, too, that Tuesday was, a public holiday. So week on week, we got 0.79%. And that's a continuation of the positive posture from the previous week. Recall that the previous week, the equities market gained 1.39%. So one could attribute that to the impact of bargain hunting around, especially bellwether stocks. Bellwether stocks are stocks that usually influence the direction of the market. Take Afri, Airtel Afri, for example. Airtel Afri in the last 7 trading days moved from 760 naira to 770, 770 naira, and that's quite close to its 52-week high. Of course, Airtel Afri is in the ICT sector. Ditto for the MTN, which is another company too on the premium board. MTN too has shown some positive gains at 174 naira. This is one stock that, if you look at its 52-week low, you're looking at 130-something naira. The industrial stock, of course, the big elephant there, which is Dangote Cement. Dangote Cement is already trading at its peak 52-week high at 280 naira. And this is a stock too that's just a few weeks ago. The 52-week low was just 155 naira. So if you look at some of these bellwether stocks,
I just want to quickly just cut you in there. Prof, just give me a moment. Yes. Why do you think investors are switching over, taking more interest in these bellwether stocks that you're mentioning?
Yes, because investors feel they are fairly priced. Or even better still, they are undervalued. Investors take positions or do bargain hunting in relation to stocks that they feel are undervalued. And remember too that the investors we are talking about here are more of the sophisticated investors, because in our market today, the bulk of investment is being done by institutional investors. Just talking about the pension funds and the mutual funds. Yes, of course, we have some retail investors to play in there. So these investors, sophisticated investors, institutional investors, they are able to identify stocks that are fairly valued and or undervalued, and they are picking them. On the main board, for example, look at a stock like Okomo Oil. Okomo Oil that is trading today at 125 naira. The 52-week low of Okomo Oil was 85 naira. So if you look at the jump in some of these stocks, it tells you that investors have confidence in their valuations, and that's why they're taking positions in them. And the other one too, of course, you mentioned it, is the NGS Group. The NGS Group also contributed to the performance we had in the markets. A stock that came in at 17.75 kobo. Recall the listing by introduction was 1.96 billion shares, and today we are talking about 22 naira. So
Prof, you rightly noted that the NGS, Prof, I just want to say that you've just mentioned that the NGS Group is one of the stocks that have been recording significant appreciation this week. That is very well noted, because the price just jumped to about 23 naira, close to 23 naira this week. But what is your take on the listing of the Nigerian Exchange Group? Don't you think that as a subsidiary, as being listed on the company and being a subsidiary of the same company, don't you think there's going to be a conflict of interest there?
Well, that's usually the fear when you have, demutualization, a stock exchange demutualizes and then gets listed on itself. That's the usual concern. Of course, what they have tried to do in our own case is to, spin off, if you like, the regulatory arm of the exchange, as an autonomous entity. As you know, the NGS Group has 3 subsidiaries. You have the NGX Exchange Limited, which is the operating arm. You have the regulatory company, and then you have the real estate company. So the regulatory company is now on its own, different structure, different management. That way you mitigate, you minimize the risk associated with conflict of interest. But I also think that it also puts more work on the Securities and Exchange Commission. It now behoves on the SEC to ensure that the regulatory arm of the group is well funded, that there is no cross-subsidization of functions. By that I mean revenue from the exchange is not taken to the regulatory arm and vice versa. So it is for the SEC to ensure that that happens. And as long as we have effective and strong regulation, coming from the apex regulator, we don't have anything to fear. And given my knowledge of the current management of the Securities and Exchange Commission, I think we haven't got any cause to worry.
Okay, Prof, still on the local bus, that's the NGX. It's recently, this week, it delisted a number of companies. What is the likely implication of this development for the capital markets? We're seeing companies that been trading for some time and suddenly they've just been delisted. How do you think this would affect the capital markets?
Well, it's even interesting that is happening after the demutualization of the exchange. Of course, demutualization is the process by which the former stock exchange, non-profit making was converted into a profit-oriented company. So now the exchange is profit-oriented, and there is usually the incentive, if you like, not to penalize, not to delist companies, because these companies represent a source of direct revenue to the exchange. Of course, they pay listing fees and all that. So for the exchange, to still do that, in spite of the fact that it's now profit oriented, that also gives us a lot of confidence. But let me also say that the listing, comes in 2 ways. The exchange has two windows for delisting. The first is voluntary delisting. The second is, compulsory delisting. So companies can choose to delist, to exit the exchange. We've seen that in 2018, I think, 7-Up, voluntarily left the market. And recently, too, last year, 11 PLC, formerly Mobile, also chose to leave, following a resolution by the members that it should leave.
We're going to continue this conversation.
The other one is compulsory.
Prof, you're going to hold your thought there. Just hold your thought. We want to take a short break. And now, when we come back, we'll continue this conversation. And that's in a moment. Do stay with us. This is Capital Markets. Welcome back. If you're just joining us, this is Capital Market Live on Channels Television. Now, in recent times, the Eurobond market appears to be quite attractive to the government and companies in Nigeria. First, it was the federal government successfully raising about $4 billion. Just a couple of days ago, Fidelity Bank issued $400 million Eurobond, which was fully subscribed. Now, Prof, what is the motive behind all these, and how does it affect the Nigerian capital market?
Yes, before then, Will, if you permit me, I was talking about the compulsory aspect of delisting. Those are as a result of governance issues, regulatory issues. When companies don't comply with post-listing requirements and repeatedly, they are warned and they still, don't comply, of course, the exchange will have no choice but to, take them off the market in order to boost investors' confidence and to protect investors. So that's the other arm of the listing. Now, back to your question on Eurobonds. Yes, recently we saw Fidelity Bank, issuing a $400 million Eurobond. Fidelity Bank, as you know, is a Tier 2 bank. But, it's something that we have always associated with Tier 1 banks. Earlier in the year, not too long from, ago, Access Bank had also gone and done successful issuance of Eurobonds. Of course, for me, it speaks to the level of governance we have within the banking system, especially for these banks that are doing it successfully. Of course, before that is done, the bonds are rated, and for the bonds to be in most cases oversubscribed, just as we read in the case of Fidelity Bank, by 1.9 times. It speaks to the quality of management, the level of corporate governance within the bank. And of course, that the bank has succeeded will also mean, talking about the impact, the money, of course, will be used for expansion, and that should rub off positively, not only for the shareholders of the bank, but for the entire stakeholders in the bank. So I think it's something that is a positive development, that our companies are going to the international capital market and they are succeeding, just as the federal government is also succeeding.
Speaking of making great success, we see that the companies not only are successing in the international market, they're also doing well, because we have some corporate earnings that have just come in this week. And we see that such banks like STANBIC, IBTC, Unilever, and Africa Prudential have posted their Q3 corporate earnings financial report for the third quarter. What we get a sense, how do you talk about, what would you say is the implication of this, or how would you break down their performance this week?
Okay, I mentioned earlier that part of post-listing requirements is that you submit periodically your financials, and this week in particular, a number of them have done that. You mentioned STANBIC IBTC. STANBIC IBTC actually recorded a decline in, from what I saw, a decline in earnings. That's talking about profit after tax compared to the same period, in 2020. If you also look at that of Africa Prudential, which you also mentioned, yes, it's on your screen there. You can see STANBIC IBTC's earnings per share actually dropped. The same for Africa Prudential. Africa Prudential also had a drop in earnings, in spite of the marginal, growth they had in, revenue. And if you take a critical look at that, or a closer look at that, you realize that for Africa Prudential in particular, the personnel costs and other operating expenses were quite high, relative to the previous period. As I said, there was growth in earnings, but earnings after tax fell because of that increase in personnel cost. But Unilever, actually did well, going by what was released. Unilever moved from a loss position to a profit. Yes, that's it on your screen. From a loss to a profit position. Look at earnings per share of Unilever, moving from negative 29 to positive 6 kobo. So for Unilever, that's quite encouraging. But now back to STANBIC IBTC, you wouldn't be surprised. I wouldn't be surprised that perhaps that's also what is dragging down the share price of.
Prof, what do you think is responsible for STANBIC IBTC?
A stock that was.
STANBIC IBTC, also the Q2 results were not also was not so impressive as well. What's going on there?
Yes, for STANBIC IBTC, for the companies generally, I told you about Africa Prudential, what one could quickly spot. But for STANBIC IBTC, one would need to go through the, financials in details. The statement of profit or loss and other comprehensive income, the statement of financial position, the changes in equity, the statement of cash flow, and the notes to the financial statement. So these 5 that were released, will need to be taken together to be able to, determine what, really went wrong in the case of STANBIC IBTC. As I said, the share price has been affected. This is a stock that used to do 45 naira. Today we are talking about, 39 naira or thereabouts. So I think for some other companies that we are still expecting, for example, UBA has announced that is planning to submit their interim financial statements before the end of October. So as these results come in and as they are analyzed, I'm sure they will also be reflecting in the stock prices.
Okay, Prof, before I let you go, can you give us your take on the likely implications, we're talking budget, that was buzzing in the air now, of the 2022 budget proposal for the capital market, especially the backdrop of the huge budget deficit? How do you think it's going to affect the capital market, the proposed budget, the 2022 proposed budget?
Okay, yes, I think even the presentation by the President of the appropriation bill to the National Assembly, the timely presentation is already affecting the market positively, because it's, creating this environment of, if you like, certainty. If by this time you don't have the budget, there'll be uncertainty in the air. So the timely presentation is already rubbing off positively on the budget. And because the budget is 2022 budget is an expansionary one, I expect it to have a positive impact, even though indirectly, on the capital market. Because when you have improved infrastructure, when you have improved power, for example, of course that will rub off positively on companies that are quoted on the exchange. And if they do well, we also expect, because that will reduce their cost of doing business. And then if they do well, we expect their share prices to also rise. So an expansionary budget that has more on infrastructure automatically would feed into the capital market positively. The other thing is that, of course, we are waiting for the Finance Act, the Finance Bill, the 2021 Finance Bill that usually accompanies it. So once that is also passed and it becomes an act, you now find that there'll be certain things there too that will be beneficial to the capital market. If you recall, the Finance Act of 2019 and that of 2020 had things there that directly have, touched on the market. Things like taxes around, tax waiver, if you like, with respect to real estate investment trusts and and securities lending. So when the Finance Act comes out, we now get the details. Now, regarding the borrowing, the deficit is huge, 6.2 trillion. But we also know that part of that deficit will be financed, by borrowing from the domestic market. So government intends to issue bonds in our local market. And of course, that will also contribute to, deepening the bond the bond market in Nigeria. So as government borrows from the local economy, even though we know it has its own side effects, people talk about crowding out effect. But what is important is that the government is also borrowing through the capital market. But as I've always argued, as I've always suggested, that borrowing should be such that the loans are the bonds are infrastructure bonds. We do more of sukuk, we do more of green bonds, and even in the budget speech, listening to the president, he talked about the use of sovereign green bonds. So these kinds of bonds are encouraged, bonds that are tied to infrastructure. And when you do so, of course, the capital market will be the better for it.
Thank you so much, Professor Waleke, for your insights on the program tonight. They've been very interesting. Thank you so much. I've been speaking with Uche Waleke, Nigeria's first professor of capital market at Nasarawa State University, KEFI. He's also the president of the Association of Capital Market Academics of Nigeria. Many thanks, Prof. Uche, for coming on the capital market this evening. And that's it for today on Capital Market. Don't forget to join us next week. I'm Willie Bong. Thanks for watching.